Not too far from record highs. What's the main driver of it?
It's been a pretty methodical move, yeah, especially in this last little stretch of it. I think the drivers have subtly changed a little bit. So in the last little bit, you mentioned industrials hitting a new high, semiconductor index hitting a new high today. Semiconductors peaked almost a year ago. And so they were kind of led the way down, and now they're back to a new high. That tells you, obviously, that China trade deal stuff is getting priced in, and it's taking over from the more defensive bond-like stocks. Still, though, the NASDAQ was up all day, not just about semis. It was semis and FANG, familiar leadership. So I still think it's a kind of two-sided thing where the big growth stocks, you can't find people that hate them. And then I think the cyclical stocks are starting to come back around, transports as well.
Sarat, pretty good momentum, 5 or 6 sessions in a row now, even if today's gains weren't big.
Yes, I mean, to Mike's point, you're seeing the internals now, especially for pro-growth, improve. And yesterday you saw the transport come back. Delta had good earnings to go forward. So I think the market's now predicting this China trades. We're probably closer to the end than we are in the beginning. But that, to me, could be a potential where we've got to be careful. Earnings are starting next week. A lot of bullishness right now. Investors are back in the market. So I think, although I still like the market here, I think you've got to be a little cautious to put new money to work.
I mean, part of it has been, and Rick Santoli told us about this, the yield stabilization. The 10-year yield is back above 250. I mean, the real hand-wringing came when it was below 240. We're back up there, Mike.
Yep.
Even though we've had some data misses, services and ADP payrolls today.
Yeah, I mean, I think the bond market, and I'm sure Rick would agree with this, that it kind of hit these downside technical yield targets. It was a furious rally. It kind of got a little bit overextended, and now it's just easing back. It's not necessarily reacting to every data point because we are still waiting for jobs, and I think in general the outlook for quarter one looks okay. But no, I think to Sarat's point, the thing to look out for now is having a sense of overconfidence get infused into the market just as we reach the old highs, just as we get to the precipice of earnings season, and then we see if, in fact, there's a little more behind it or not.
Sarat, we've been very focused on the yield. What about the dollar? It's kind of holding steady above 97, the broad index. Is that going to be an issue?
I think the dollar could be an issue because if our dollar does get stronger, that's going to hurt our market. And if more people kind of want to be with us. So I think we have to watch that, especially for global earnings, multinational earnings. It's not something that I think is going to happen, but it's something you definitely got to be cautious for because it can have these unintended consequences, especially as the rest of the world is still struggling to get back to some type of growth. And we've got slow but steady growth over here.
Now, a handful of industrial names hit 52-week highs, as Mike mentioned. It's the second best performing S&P sector so far this year, right behind tech. Mike, is this China-led ultimately?
I think China is helping to actually drive it, but I do think that the particular industrial names you're seeing right there are a little more the slow and steady, these companies that over decades have compounded earnings, electrical equipment type names, and Fastenal has always been this kind of long-term value stock favorite. So I see the reasons for it, but they're similar to a lot of these stocks that are otherwise working, which are just long-term predictable cash flow businesses with a little bit of help from a cyclical uptick, and maybe we get help from China.
And CAT got a downgrade today.
CAT got a downgrade. Boeing was down today, so you didn't get the usual suspects of big bellwether industrials that people chase just to play the headlines.
Are you in this group, and if so, what types of companies?
So on the industrial side, it's really we have more transports, and then we have a couple. Honeywell is one of our big ones in there. Fortive. But I think what you have to be careful for is you've had such a rapid bounce back that the market's kind of predicting that we're not going to go into recession at all. Not saying that we are, but if we get slow growth, I don't think some of these valuations really justify what their growth rates are. It's just kind of a bounce compared to where we were three quarters ago.
But the whole market or industrials?
Industrials per se. I think there's more opportunity in some of the other sectors, but I think there's some good quality companies that you want to hold in this sector.
Did you say you own the airlines? Which one?
We do. Delta is one of our largest holdings.
Talk us through that.
So if you look at kind of United, Delta, American, Delta is the best run of them all. We do own United as well. But I like the balance sheet. It's got almost a 3% dividend yield. They're really focused on earnings growth and very shareholder friendly, and kind of they've gone through the whole restructuring that the other two are still going. So Delta trades at 7 times earnings. Normal trading at 9 times. And I think if you can get any type of 9 to 10 times multiple with a good balance sheet, you still have a good upside from here, given kind of what's going on in the global markets.
I mean, airlines are popular, I feel like, right now, people citing Buffett, following Buffett into the airlines, though they have underperformed really over the last year.
Yeah, they have underperformed. I mean, I think they look very cheap. They have for a while. They're a way to play the consumer a little bit. So I get why they're popular. The problem is they're they also look cheap when things are about to turn for the worse. So that's been the debate around them for a while.
It's one of the sectors that investors will kind of throw out really fast when you get an inverted yield curve or you think you're going to go into a slowdown. It's the first thing that investors sell. But the fundamentals of a Delta are very strong. And we think, even if we went through a downturn, this is one company that could survive it, unlike the past. And that's where investors are focused. What's going to happen when we get a recession? Will this company actually survive?